following content is a technical analysis on crude oil West Texas Intermediate futures here off the daily interval, where I have held the firm conviction that we have arrived at a pretty momentous key inflection and/or juncture point where significant changes are beginning to unfold. Whereas you strip away all of the elements of the charts here, you have not the most not impeccably defined, yet an undeniably noteworthy inverse head and shoulder bottom bullish sentiment pattern emerging as we venture into the summer months, which coincides with the pinnacle of crude oil season. Whereas you have four nice clean consolidation phase of a head of shoulders there, followed by your head, and again just a nice clean four shoulders of consolidation amongst that key inflection point. With the implementation of the Russian export supply cuts and the consequential discussions regarding supply reductions by OPEC, I have maintained a highly optimistic outlook on crude oil. It is against this backdrop that we had decided to initiate a long position in the stock of Helmerich and Payne Incorporated, a company of the energy sector in oil and gas drilling, recognizing the profound impact of this consequential catalyst before it was fully apprehended by the financial community on Wall Street. Whereas we have now a nice clean continuation of this reactionary uptrend line that has been successfully defended here with the 50-day moving average hovering up above, and it is now broken above resistance and a potential March move right back up to 37.38 on that second price target. Let me take you back to the crude oil futures here, and this is what I see here. Nice clean breakout. We have positive and or bullish divergences. We had that candle close. Yeah, we ended up breaking down below that inflection point, but closed right back above it on that close, putting in a nice clean bullish and positive divergences amongst all three technical momentum indicators, with again stochastics on fire right now as far as carrying the momentum of the price action to the upside, with hardly any lag within the structures of its momentum, off a clean primary reactionary uptrend line off the late February reactionary highs. And that was a clean breakout where we ended up breaking out a few days ago, back tested it really to the button there, and that has been successfully defended by bull traders and or long traders in crude. Whereas we're starting to snap that 73.20 price resistance here, and that's a big inflection point. But even bigger of a key inflection point off the July gap of 2022 of last year, just a continuous reactionary highs, primary reactionary high downtrend line off that year, and that is a big inflection point to watch. Whereas you have the 200-day moving average hovering in up above, coinciding with the 236 fibs retracement. Now, if we start to rally there, which is another, call it another 6.3% to the upside, if that level gets taken out, I would only suspect a big wave of short covering, short sellers, bear traders to get stopped out there, and a big March move right back up to that $83 per barrel, and then an inflection point of that 382 fibs retracement, call it 86.64, 85.72 price resistance. Two more targets to be knocked on. But again, that is a clean breakout of what you would call a bullish falling wedge pattern, and we'll see what happens. Short sellers, bear traders, they want to defend this key inflection point once again, really at all costs. But again, I with all the fundamental catalysts that are ongoing, unless we have the administration aggressively begin to sell off the special petroleum reserves once again, I could only see some pretty big upside to come. Just in engaging in continue odds for a move to the upside, unless a big recession unfolds right around this key summertime before, or unless a deep big recession hits towards the last quarter of this year, or if a deep recession were to carve its hands into the crude oil markets. That's exactly what I see there, and just a phenomenal breakout and back test, and a snapping of their moving averages to the upside, only increasing the odds, with momentum indicators just thriving and being well nourished above their zero line thresholds.